This episode is sponsored by Lendlord. Lendlord is an online platform designed to help landlords and property investors manage, track, and optimize their real estate investments. Lendlord has a whole suite of free services, including a deal analyzer, property flipping calculator, tenant CRM, profit and loss reports, and so much more. I personally use Lendlord to track all my rental properties. Think of it as a modern day upgrade to boring old spreadsheets. Lendlord also has useful tools to analyze real estate deals, allowing you to calculate cap rates, IRR, and annual cash flows. It's completely free, so check out the link in the description below and let me know what you think. Hey, Saretsky here. Welcome back to the show. Lots to touch on this week. We've got an update in Toronto, some big news on the housing supply front. I want to get into what's happening in the rental market, kind of where I see that going over the next few years, as well as what's happening in the Canadian economy in terms of inflation, potential recession, and of course, consumer insolvencies with, naturally 400 basis points of rate hikes in the past 12 months, waiting for that to sort of slip through. So kind of start things off here is the Toronto City Council just approved unanimous, basically removal or extinguishing single family zoning in these locations here, pretty much all across Toronto. So basically moving forward, you'll be allowed to build duplex, triplex, fourplexes on all single family lots moving forward. So this is a huge change because if you go through the list over the last 6-7 years in, let's say, Vancouver, Toronto, the two largest, most expensive housing markets in this country, it's been a barrage of demand side measures. It's been foreign buyers tax, it's been increased foreign buyers tax, speculation tax, empty homes tax, rent controls. The list goes on the demand side, but there's really been nothing that's been done on the supply side. And this is kind of what I've been advocating for, is that I think that a lot of the measures on the demand side, yes, I know they come with loopholes, they're not bulletproof, but you can't look at just the demand side. It always is a supply and demand side in the real estate market. And so they're now coming out with these duplexes. Now, basically what's going to happen here is land values have found a underlying support. Okay, so this is what it is. Anytime you upzone a parcel of land, it naturally tends to increase the value of the dirt. That's just how it works. And so you have put a floor under Toronto detached house prices. Essentially, if they get too cheap, developers will obviously come in, incentivized to build and hold. So you do have a natural investment play here moving forward. So in the near term, the landowners win, and that's typically how it goes. Like the game of Monopoly, you own the land, you win the game. And so it is what it is. In the near term, the landowners are going to benefit here tremendously. Over the long run, this is obviously what's needed. You have to bring more supply to market. So I think the families, as they get more supply of duplexes, triplexes, more of these 3-bedroom ground-oriented housing, this is going to take 10 plus years. This is not going to fix house prices or bring affordability in the next 2 or 3 years. It's going to take time. Now, again, it's not, when we do this blanket rezoning, you have to also factor in that these developers that are going to buy this land and redevelop it into a duplex or what have you, like the numbers still have to pencil. And I can tell you, at least here in Vancouver, the numbers on the duplex side, because you basically brought in a lot of this policy already, is still pretty tight. So you can't just bid up to any number and make the numbers work. So there is always that risk reward. But you will start to see the supply gates open up. Again, if you're bringing 1 million people into the country, clearly you have to look at the supply side as well. And I know that there's been like a lot of like pushback around, yeah, but this supply isn't going to be affordable. Look at the cost of new constructions. It's so expensive. It's because like there's no one is milking anybody here. Like, developers of these ground-oriented units, I can tell you, I've done one myself in Calgary. I've worked with people doing them here in Vancouver. There's really not, the profits really aren't that great. Like, for the risk reward, it is a pretty, like, you're typically targeting a 15 to 20% return on the entire project. So it really this is not a massive sort of profit when you consider the risk, right? If the market moves, 5 to 8% on you while you're under construction, you have no profit. You're done. So again, the risk reward factor here, it's not all one-sided. Now again, until the cost of construction comes down, which I don't think is going to happen anytime soon, until the robots start building the houses for us, the cost of labor, materials, commodities to build these houses, it's an expensive input cost. And so you can't necessarily look at the cost of a new home and say, well, we should not build it because it's not affordable. Over time, the housing will age and it will become more affordable. And so new supply, yes, it is expensive because it's expensive to build it. And so people would say, well, what's the alternative to not upzone and to not build density and just have the status quo? That's just not realistic. The reality is cities, governments, they do rely on real estate turning over. They do rely on development happening to basically fund tax revenues coming in the door. And the one thing I'd point you to is the rental market. Like if it was just speculation and there was no supply issues, well, rents wouldn't go up because you would have tenants would have an abundance of properties to choose from. And so at the end of the day, people say, well, landlords are raising rents because their interest rates are up. Well, as a landlord, you have to have the ability to pass on that rent, which means the market has to be willing and able to absorb it. And this typically happens through incomes. So you need incomes to rise. And if your incomes are rising, you can actually pass through rents. Again, people that are maybe focused on Vancouver and Toronto, I'd point you to markets like Calgary that went through basically about 5 years of flat to actually declining rents. And so you wouldn't actually raise your rents every year because the rents were actually falling. And so tenants would be like, I don't like this deal. I'm going to leave because they'd have alternatives. Of course, now we know that Calgary going through this boom, what happened is you saw supply shut off over the last 5 to 7 years because the market was in the doldrums. And now you've got Calgary being the largest city for year-over-year annual rent growth. I think it was up 30% for 1 and 2 bedroom apartments in the city of Calgary. Just mind-blowing numbers. But again, coming back to the Vancouver-Toronto situation, so long as the rents are going up, which I think everyone can agree that they're going up, I think you can make an argument that your housing market is undersupplied. If people have options, they will up and leave if landlords try to pass through higher than acceptable rents. And so this is my argument for you also have to look at the supply side. Don't get me wrong, I look at the demand side around, central banks lowering rates to zero for the past decade. We certainly had a lot of influence from foreign investment. You've got some elements of money laundering. I think you've got some mortgage fraud that is well documented here in Canada. So there's all those variables. We have to take the whole picture into play here. And so I do think this is a smart move on these municipal governments. I can tell you in Vancouver, the city of Vancouver is looking at increasing the density for duplex developments in Vancouver. Not only that, but the BC government, David Eby, has said BC province-wide, we are going to eliminate single-family zoning in this entire province, and we're going to now allow duplex, triplex, fourplex with legislation expected for this fall. So again, the macro will always matter. It will play out, but this is an underlying fundamental support for land values in these two cities. This is what it is. So if anyone is here hoping for the big crash, yeah, I would be less optimistic on that on the detached side. Again, particularly when we're sitting still, when you overlay that, the fact that you're sitting at record low inventories dating back to 2005, at least here in Greater Vancouver, and we're seeing that playing out across a lot of these other major metro communities. And so, I had this conversation with a Bloomberg reporter this week, and she goes, do you think Vancouver rents can get to $3,000 for a 1-bedroom apartment in Vancouver by 2030? I said, well, okay. Right now, your 1-bedroom rent is $2,500 in the city of Vancouver on average. And I said, well, if you compound the rent growth at 3%, you get to $3,000 by 2030. So in 3%, I would argue was actually fairly conservative. In fact, if you look at Vancouver rent growth over the past 10 years, it's averaged about 4.7%. And over the last 20 years, it's averaged 3.7% annual compounded growth. And so I said, well, let's assume that you don't even grow at those rates, but you grow less in an inflationary environment. I think that's incredibly conservative. We're seeing wage growth filtering through. You know, you had the largest federal government strike that was ongoing. They finally came to a deal where they raised the federal union workers' wages by 12% over the next 4 years. That's a 3% annual compound growth plus a bonus on top. So we are seeing sort of the wage growth coming through, and I think that's going to support the rental market. So again, you're going to need to try to balance that out on the supply side, particularly if this government is hell-bent on funneling through as many people as they can into this country. But overlaying all of that, looking at some of the macro, again, it's not all like great news. This is a new bull market. Go out, blow your brains out. Like, again, yes, there's fundamental changes here that support the value of the land. We have very low inventory. However, I think the overall macro still concerns me. If we look at it, we can see Canadian consumer insolvencies are rising back to levels last seen pre-pandemic. If you look at monthly consumer insolvency filings in Ontario, in BC, in Alberta, they are rising. And they are rising as one would expect when you raise rates by over 400 basis points on a highly indebted household sector. So it all just comes down to, is the economy going to roll and slip into a recession? I think it's likely, and basically the next question is, how deep of a recession is that going to be? And I think that's going to be sort of the catalyst for the housing market, which I think probably keeps it relatively contained. But these are overlying factors. So again, I don't think it's a market that you go and blow your brains out. Clearly, we have upwards pressure on house prices right now, as we're seeing. I still think there's some caution warranted for people that are out there that are sitting on cash debating about what to do. Again, caution is warranted. If you're going out and buying a property to live in for the next 10 years, of course, it's a much different story than someone speculating on a pre-sale condo. So these are all things to take into consideration. We're going to have the Canada CPI inflation out, I believe, next week. RBC projecting looks like we're going to see headline CPI inflation coming in around 4.1%. So we could have inflation potentially even sub 4 as of next week. The Bank of Canada has projected inflation to getting back down to 3% this summer. That seems increasingly likely, but again, maybe 3% becomes the new 2, and we fail to get back down to that 2% target. And again, maybe that is the catalyst, as I've said, for rent growth. If your wages are going to grow at a pace of 3.5% or whatnot, you naturally would expect your rent growth to sustain. Again, unless you can oversupply the housing market, which I think, thankfully, governments are starting to figure out that while you can tackle the demand side with policy measures, stress tests, foreign buyers tax, etc., you also have to factor in on the supply side. So municipal governments, provincial governments, finally, I think, starting to figure it out. So some relief hopefully coming over the next 5 to 10 years. This is not an overnight solution, but it is a step in the right direction. So anyways, hope that helped. As always, we'll see you next week.